All right, good morning, everybody. We're still in hurry up and wait mode. It's very likely the election results won't come in a timely manner. And there's a big possibility that no matter what happens today, it's not going to be over for, a week, couple weeks if it's contested. Markets are still waiting on that, waiting on a lot of data. We've got auctions today as well, and data coming out of Europe, as well as overnight, we're going to get data out of Japan. FOMC this week as well. So it's just going to keep coming at us, and a whole lot of reasons to believe that we're not going to break down. But Spot Gamma, in their founder's note last night, we don't have the AM one yet. Spot Gamma pointed out that there is a critical level at 5,700 in the SPX. If that breaks, we could see an air pocket of risk, real violent move to the downside, and they made it clear it wouldn't be oversold conditions. It would just straight up be a sell-off. It would be considered a broken level. So if you don't read the Spot Gamma's notes, you're missing out. I'll give you a really good idea of what we have on the table today. So we're going to have it coming at us all day today. And then, of course, tomorrow we've got more numbers. I keep getting asked, what do I think we're going to do today as opposed to yesterday? The answer is not going to change. We're going to hold this range until we don't, right? So if nothing breaks, we're going to stay in this really tight range. And if something breaks, well, then we're going to really expand fast. Volume is looking normalized at this point. It's less than 60. Everything is fine. We can see that they're not hedging. We're holding within the ADRs, average daily range. And we're holding at the 10-week moving average. If you look at this on the daily, we've got this really wide bar here. And we're in the lower portion of it, just holding this structure. Now, today's candle being inside of yesterday's candle, that's just an inside day. Being inside that other day, now we're IX10. It's a really tight range, but all of that is trapped inside this really big bar. That's not such a wide range. That big bar, 58.44 down to 57.33, we have to get out of that. And we're on the lower edge of it. So 57.32 cog line, we break that 57.32 in the ES. I think it's game on for 57 flat. Then we break that and we can continue to expand lower. The SPX, well, Spot Gamma covered that one in their notes. We usually have a little edge to one side or the other because we'll be closer to one of these red lines. But we're basically flat this morning. So with the average daily range and us being right in the middle of it, it's 50-50. We could go either way. But we still have the expectation that we're just going to hold the line anyways. We kind of need to hold the line. The way Spot Gamma laid it out, we need to hold it. They made a really good argument about the options structure around us and why, if we break that low, that it's such a critical drop. There's a lack of supportive structure underneath there like we normally would have. We have a very narrow channel today. It's not as narrow as it could be, but it is pretty narrow. A narrow channel implies that if we break out, that it can grow legs and we can really run. Now, these channels don't make price do anything. It just gives us an idea of what to expect out of price if we do get a breakout. This says if we break out, we could really move. But breakout of what? It's a fair question. Yesterday's high is the bottom of the weekly channel. Even if we break out of yesterday's high, we've still got Friday's high to deal with. And if we break out of that, then we've got the high with this gap back here that needs to be closed. And it's that really big bar that we were looking at. So we got to get all the way to the top of Wednesday before we can break out of that really big bar. Well, that's a really big run. On the other hand, to break out going in the other direction, 57.32 cog line. I think that about sums it up as clear as we could see it. There's nothing here. Not until 55.32 cog line lines up on this point of control back here. So you're talking about from 5,700 to 5,550. That'd be fun. If we try to run back in the other direction, we can get back inside this really wide range from last week. Point of control at 58.70. So we'd start to cut through this air pocket here. But 5,800 proved to be a structure that we couldn't get through before. It's very likely they won't be able to get through it again this time. But that'll be the level to really focus on, getting through 5,800 if we try to make a move back. Ten-day, 30-minute volume profile. As you can see, we're at the bottom of it. There's nowhere to go but down. No structure to anticipate at these levels either. So we're in a high volume zone. We can expect to just sit here and chop through it. We don't have to break down today. I want to continue to stress that the base case argument is that we don't break down. We don't go anywhere. We just hold the line and we wait on data. We wait on the election. We wait on FOMC. We wait. But if we do break down, I wouldn't try to catch a falling knife and catch the bottom, like yesterday with that reversal off of the lows. That was a really nice play yesterday. Ran it back up, beautiful, textbook. Not so sure we're going to get that run back up today if we make that kind of breakdown. So just be prepared for that, right? No VPOC to carry forward. Even if we were to try to carry it forward, it got hit last night at 2 o'clock. So textbooks will say carry it forward anyways. If you don't have enough pivots, think about adding that. We are working our way back towards the 10-day. We're less than 1% at this point. Just because we're on our way back up doesn't mean we can't head back down again. We've got a lot of examples where it's moving in the right direction and it still falls down. Less than 1% below the 10-day is not drastically oversold, by the way. And looking at the 10-week, well, we're there, right? Nice and flat. We're in the center of the basketball court this says we could move 2.5%, 3% in either direction. Not in a day, right? This is a weekly perspective, but we could easily move 2.5%, 3%, and we wouldn't be overbought or oversold. We wouldn't be extended at that point. That would just be getting back into the groove. When we think about how far away from the 10-day we are, we're not oversold here. We're not overextended. We haven't traveled too far, too fast at this point. And we could easily go another 0.75% to the downside before we would even entertain the idea that we might be just now getting into a little bit of oversold conditions. So we're looking at least 1.5, 2.0 to the downside before we start to have that consideration that maybe we're getting a little oversold at that point. A 2% move from where we're at doesn't even get us to the edge of the expected move. This is my version of the week's expected move, since I honestly believe the indicator is a little janky this week. I marked those levels out yesterday. But if we were to make a 2% move to the downside today, we would still be within the week's expected move. So we could easily make a 2% move today to the downside. That would be nothing. Otherwise, the expectation is that we hold the line. Now, we can try to visualize this line a lot of different ways. But we have the 1-day estimated move. $57.90 to $57.13. There was another level that I was looking at here. Let's turn this ADR off. Kind of tighten it up a little bit. It's basically Friday's low. What day is that? Halloween. Halloween's low. That'd be your range that you got to deal with. That little dance where we came back inside yesterday, that was the last hurrah right there. If we make a move like that today, I think it's game on to the downside. And it's very likely we won't be able to get all the way back up to 5,800. Anyways, I think we would get stuck at 57.92 cog line before we would even get to 5,800. So that'd be just like right there. So for equities today, I mean, you can look around. I think you're going to be better off with commodities, say gold, oil. Maybe find stocks that are running because they have their own news that's making them run. Otherwise, if the S&P and the NASDAQ are sideways and waiting on data, 80% of the market is probably going to go sideways waiting on what the S&P and the NASDAQ is going to do. And that if we break down, then it should be a falling tide and everything should fall today. That will be one of the tells that we really are breaking down with some expansion behind it and that we're just going to go. There shouldn't be any sector left going in the other direction if it's going to be that kind of move. Now, I'm with Spot Gamma on this. There's no reason to think we're going to break down. We don't have to break down. There's, you know, we're flat this morning. We're not negative this morning. So putting the caution out there that, look, if we break, it's going to be nasty, but there's no reason to believe we're going to break. Base case argument is we're going to hold the line today and wait on data. And we got a lot of data to deal with today anyways. China ADRs are up. Bitcoin, precious metals, uranium getting a little bit of a rebound after the beatdown that it's had. Even the Mag 7 group is up a little bit. %8 of the S&P is up 0.5%, and we're looking mostly at electronics and finance. I mean, it's not much of a surprise, right? Semiconductors, and some banks, insurance. Not a whole lot there. For the NASDAQ, 19% of the NASDAQ this morning is up at least 0.5%. Lots of semiconductors in there. Surprise. A little bit of medical, discount stores, department, some China ADRs. So I wouldn't look for a broad rally today. If we do see a rally in the indexes, which can happen, it could come from 0-day flows, right? Say they go in and they pounce on the S&P or the NASDAQ's options and run it like a 0-day drive to the upside. It's absolutely possible that we could get something like that. So on this breakout scenario that we've been talking about, I don't want to make it sound like it's a one-sided trip if we break out. We could get a topside breakout all because of 0-day flows. It is possible. It's not likely, and I don't see a reason for that, but price can do whatever it wants, and we never want to assume and not plan for everything. We've got a downside plan, got an upside plan. Watch the 0-day options flow, because if we do get a break to the upside, that'll be the catalyst that, or the fuel on whatever catalyst that gets us broke out. It'll be the fuel to keep us going. Pot stocks, a little bit of a bump to the upside with China, solar. You know, it's been such a smackdown on uranium, ran it all the way back to the year-to-date anchored VWAP. Kind of want to hold that level. You see what happens when we don't. It gets pretty nasty. It says semiconductors are up, but that's not looking like very much yet. Let's get outside of yesterday's range. And we've still got this really big candle from Halloween we got to get through, right? We're above the half. That's a good start. But you see these big wicks up here. It just indicates where those sellers Every time we run up into it, we haven't been able to get through it. All right, get that liquidity taken out. Just can't get through there yet. So watch the clock. Keep your eye on the data as it comes out. Be careful, be safe. I'll see y'all tomorrow.